Hello, everyone, and welcome to today's Gold Rush Daily. But today I'm just going to go in depth. I'll look at the DXY. Even as we digest, today the market is bracing ahead of today's NFP data, which is very, very crucial. Okay. So why is the NFP data today very crucial? Because it's one of the data that will determine whether the Fed is going to cut the rates this month in their September 17th, 18th meeting. And yeah, it's gonna be a test for the Fed. Right now, we are talking about 85% chances of a 25 basis points cut come the Fed rate decision this month of September. So today's NFP is so vital for the Federal Reserve decision on interest rates. And this is because when you look at the NFP, it's a key gauge of labor market and economic health. So basically, it provides some critical insights into hiring trends, unemployment, and wage growth, which are very key components, or what I can say core components of the Fed's dual mandate to promote maximum employment and price stability. So when you look at maybe, for instance, in a scenario whereby maybe we have strong job gains, that is a strong job gains could insinuate an economy that may be overheating and therefore increasing inflation risk and potentially prompting the Fed to delay the rate cuts. The opposite is true when we have a weak job gains or a reduced job gains. That would suggest that economy is cooling and therefore decreasing inflation risk and therefore potentially prompting the Fed to cut the rates. So it is very important when now if we talk about the NFP, now you can see the significance of the NFP. Also, you realize that the markets are already priced at a high probability of 85% basis point cuts come in the upcoming Fed meeting on September 16, 17. So and with the when we look at the Fed's funds futures, they're also showing more than 90% odds of rate cut. So today's NFP outcome can either confirm those expectations if the data is soft, that is, if we see a weaker NFP, or it might derail these expectations if the data surprises on the strong side. Okay, if the data comes out stronger than anticipated. So what we are looking at most probably is now how the actual data is going to come out. If you look at the forecasted figure, we are talking about the previous month, that is the month of August, we are talking about 73K. I mean, the month of July, it's 73K. So what we are awaiting today is the NFP for the month of August, which is being projected at 75K. So the actual will be very significant in terms of determining where the market is going to go. So beyond maybe probably beyond the headline figures, the unemployment rate, the wage growth, and maybe probably revisions to prior months data, especially maybe July and June, it's very critical. So you find that downward revision could underscore a slowing labor market, pushing the Fed towards more aggressive easing, even a 50 basis point cut. Okay, so I was reading an article by Bank of America which notes that unless the job growth stays solid, that is 70K plus, and unemployment remains low, around 4.2%, then policymakers will likely cut the rates. Okay. So another article from TD Securities was saying that analysts are watching for these details to fine tune the forecast. Okay. So that is the NFP today. So you realize again this NFP, it doesn't really just influence policy. It moves market instantaneously. So a weak report typically weakens the USD, which boosts the treasuries and lifts risk assets and gold. But a strong report has the opposite effect. That is whereby it strengthens the USD. Then it jeopardizes the treasuries and also making risk assets and gold to be bearish. All right. So just before today's release of the NFP, we saw the New York Fed President John Williams reiterated that rate cuts will be appropriate if inflation continues easing and unemployment ticks higher, but cautioned that strong data could alter that path. Okay, so that was, I think, yesterday when President John Williams, that is the New York Fed President John Williams, all right. Then the Fed chair, Jerome Powell, emphasized at Jackson Hole that unless incoming data surprise to the upside, a September cut remains on the table. Okay, so today's NFP is very, very vital, all right? It's very vital, not only for traders, not only for investors, but also it's a big test for the Fed, okay, in terms of whether they are going to cut rates or not. We know the pressure that has been coming from the US President Donald Trump, right, for the Fed to cut rates. So it's important to really factor this NFP. So if we look at the figures here, what we are seeing is the average hourly earnings month after month to remain the same. That is 0.3. The 0.3. The unemployment rate, they are projecting an increase from 4.2 to 4.3. So if we have that, then it becomes a weaker dollar, all right? If we look at the non-farm employment change, we are talking about 73K to 75K, all right? So they are predicting almost the same, an increase, but almost the same. So if you look at the previous data that we had last time, it insinuates we saw a very weak dollar last time, okay? Because 106 we had a previous actually, which was revised. It was 147K, right? Then it came out, they were predicting 106K, but it came out at 103K. Okay. So you can see the previous ones that we have been having, they've been very, very strong, right? And the reason why the Fed has been adamant in terms of cutting rates. So if, like I said, if we see a weaker NFP today, then it might prompt, it might be increase the odds of the Fed cutting rates. If we see a strong NFP data today, then it might dent the probabilities of the Fed cutting the rates. All right, but again, you're not just talking about the NFP, right? You're not just talking about the NFP. So also tomorrow we have, I mean, not tomorrow, but next week, it's also the Fed is in, let's say, call it a test, because we are looking at the CPI data on Wednesday next week. That is September 10th. The PPI data on Wednesday, September 10th, and also the CPI data on Thursday, 11th, and next week. And also on Friday, we'll be having the prelim UM inflation expectations. These are key data that the Fed will have to look at in terms of determining whether they are going to cut rates or not. Okay, so let's look at the technicals and you see maybe probably what we are anticipating. Okay, so if we go to the technicals on the daily time frame, yesterday we saw gold try to push on the downside. Okay, we saw that candle yesterday, gold trying at least to push on the downside. So if you look at the moment, what you're talking about is an all-time high of about 3578.66. Okay, 3578.66. Let me mark that. That 78.66. That's where we have an all-time high. Okay, so yesterday we saw the price being a bit bullish here. Okay, but even before we look at that, let me have a quick overview of the dollar index, because the dollar index is going to really give us and expectations of what we might be looking at. So if you look at the dollar index, we were very bullish. I mean, we were bearish. The price having taken out or broken below this trend line here, but we still see the resistant level. This level being a key level of resistance. We see how price has been unable to break below that. And also, when you look at this particular point here, this level has been a key level of supply. I mean, a key level of support. Okay, so this is how gold DXY has been consolidating. You see now, since yesterday, I mean, since Wednesday, the price has just been gallivanting or consolidating within this particular level. Okay, so today, what we are looking at, if we look at this kind of a chart pattern, what we are looking at is technically, we might be able to see the price push on the downside. Technically, that's what we are anticipating. So in case you're going to have a weaker NFP, then we might see the price continue pushing on the downside, okay? Maybe probably to this particular level. And a break below this level might propel even more lower prices, maybe probably targeting the liquidity levels at this particular point, okay? So that is what you're looking at. So in case the price pushes up, then we might see the price maybe come to this particular level. But technically, I'm looking at this kind of a situation, at least price coming to these particular levels. Okay, that is what I'm looking at technically. So what might happen today, maybe before the NFP, we might be able to see the price consolidate for some time. All right, we might be able to see the price consolidate for some time. So it's not always best to take trades before maybe probably past 12 GMT plus 3. It's not the best time to take trades. You wait for the NFP data to come out, and then now you can be able to look at trading opportunities. Okay, so if you're going to trade before the NFP data, then it means maybe probably scalping. Okay, because when we have major news, we always see gold prices consolidating, or even the DXY consolidating, right? So we might be able to see that push because we might be able to see the price push to these levels. And if the data is going to be even more weaker, then we might be able to see the price continue pushing on the downside, maybe to around the 97 levels, right? Around 97 levels. So in case maybe probably price pushes on the upper direction, that is maybe probably in scenarios whereby we are going to see maybe probably a strong NFP data, then we might see these skyrocket and maybe probably come to the 98 levels, and a break above this level might lead even to more higher prices. Okay, it might lead even to more higher prices, because if you look at the daily time frame, we have some imbalance here. So the price, if we have a hotter NFP data, the price can come to about 97.77 to around 100 levels. Okay, because we have some imbalance at this particular point. Okay, so but overall, my expectations, looking at a weaker NFP, right? That is my expectation. So I'm not saying that that is what the data is going to come out, but my expectation, I am looking at a weaker data NFP, or maybe probably to remain steady. Steady meaning that there will be no much change if you look at the previous and the forecasted. So it will be within the 70K levels thereabout. Okay, so that's what I'm basically looking at. That's my prediction, but that doesn't mean again that's what the market is going to do. Okay, that is my forecast. Remember, the forecast is not the correct. It's not. It's not. Sometimes it's not really the correct view of the market. So don't mistake me. Okay. So if we look at gold, so for the dollar index, you've been consolidating, as you can see. This type of consolidation, we usually see the price continue pushing on the downside, okay, because you've been seeing price consolidate here. This kind of a pattern, when we have a downtrend, okay, when we have a downtrend like this, then we see price consolidate around these particular levels. So this insinuates that we are likely to see even price push on the downside. Okay, so that is the technical bit of it. Higher chances that we might see the price push. But remember now, today is fundamental. So fundamentals can either respect or they can maybe probably go against the prevailing market conditions. Okay, so now we can look at gold. And for gold, I was talking about yesterday, we saw some cooling. Price retraced a little bit yesterday, but you can see we still have some more buying pressure here. If you look at this week here, the price gave us a bullish pin bar, even though it closed as a sell candle. But it's good again to backtest. Anytime you see this type of candlesticks, they insinuate something. All right, when you see these are the same candlesticks you're seeing here, price turning bullish. Okay, so these kind of candlesticks, you can see them here, they insinuate maybe probably more bullishness, because we see even though this candle closes as a sell, we still yet see some sellers trying to take hold of the market, but we still can see rejection of lower prices. So buyers still contending in terms of trying to push prices higher. Okay, so today's candle will be very significant in terms of how next week is going to unfold. If today's candle gonna be bullish, then it means maybe even on Monday, Tuesday, we're gonna see some bullish sentiments. Next week we're gonna see some bullish sentiment. If you look at the weekly candle, you see the last 2 weeks we have been consecutively bullish. So this is the third week now, all right? So we have to see how this candle closes out, because it's very, very, very significant. So if you look at the structure even from the weekly time frame, these are the levels that in case price pushes on the downside, that we want to see the price come to around 3,400 levels, all right, where we have these a particular order block. And as you can see, this was a bullish peanut which you have been eyeballing in terms of showing us where the price is likely to go. And you can see it was very, very accurate in terms of showing us what to anticipate. So if you look at the 4-hour time frame, right? If you look at the 4-hour time frame, we still see the price tends to really push on the downside. Okay, so we can see that what we have here is a very key trend line at this particular point, right? Which we see prices trying to break above that particular level. Okay, so if you clone it like that, you can see it's a channel, price pushing on the downside, then we have that particular channel. So again, this insinuates that higher chances we might see price come to this particular level. And that will be supported, especially if you're going to see a strong NFP data, then we might be seeing gold coming to these particular levels, because this is where we have the 4-hour order block. Okay, so make sure to mark those levels well in your chart so that now you can be able to really anticipate where the price is going to go. So if you look at it even from these particular 1-hour time frame, we see the price pushing on the downside. Yesterday, this was the price movement. It was very choppy. All right. Yesterday, I actually didn't even look at these charts, because I know when we have this kind of situation, the market is really likely to take traders' money. Okay, so you see it respected this particular level here, right? You see the price came to around this particular level. That's where we have this bullish, bearish engulfing, and we also have it as an OB, right? We also have it as an OB, factoring these particular candlestick. So, and then now we saw the price come to that point, drop. Today we have seen the price revisiting that point. Then we are seeing a drop. We have about that 3 minutes for this candle to close. So if price is going to close below these particular levels, the lows of today, then we might be able to see the price maybe continue pushing on the downside. Remember to differentiate between liquidity run and liquidity sweep. So here I want to see a run on liquidity, right, which might propel the price maybe to come all the way down to this particular point. And this is the level that we are looking at from the 1-hour time frame. Okay, so alternatively, Sorry, so this is the bias that I'm looking here technically. Remember, this is technically what you are looking at technically. But we need also to brace accordingly because today we have those fundamentals. So today we have the high here, right? So we might be able to see maybe probably the price come and take out the highs in case we're gonna be bullish. That is, in case you're going to see a weaker NFP data, we might be bullish price pushing all the way to creating another all-time high, all right? And that's what we will be monitoring. And above these all-time highs, of course, this is 35.78. So we might be eyeballing the 3,600 levels, okay? So if you're going to see a weaker NFP data, then we might be eyeballing gold touching the 3,600 levels, right? So that's what I am looking at, and that's how we need to project ourselves basically. So now, once you mark these levels, all right, these are the same levels that we had marked. They have not yet been tapped. So with these levels marked out like that, what is significant now is for you now, maybe probably looking at ways that you can be able to minimize the risk. So this is the level that we'll be looking at. So in case you're going to see a strong NFP data, we might see gold maybe probably revisiting around the 3,500. Um, First of all, the 3,500 levels. All right. These lows here is 3,512. 3,500 is somewhere about this particular point. So these are the levels that we'll be looking at. Price taking out these liquidities. And also depending on the variation of the data, the actual and the forecasted figure, then maybe probably might be able to see the price come to these particular points. All right. 3,800, 34,881 levels. All right. So that is what I'm looking at today. That is what I'm looking at today. Those are my anticipation. I've given you the both scenarios for a buy, for a sell. Yeah, so that's what I'll be looking at. Okay, so because above this level, it means that the price will be bullish, eyeballing these liquidity levels where we have the all-time high, and then from there, maybe probably we might see gold touch 3,600. That is if you're going to have a weaker NFP. If you're going to have a strong NFP, then we might be able to see gold push again down. All the way to these particular levels, these liquidity levels there, and then now maybe probably, depending on the variation of the actual and the forecasted figure, we might see price push all the way down to this particular point. Okay, so ladies and gentlemen, today is the day that you really want to look at your risk management. Remember, if you're looking to trade data, there is two ways you can be able to do it: the spikes when the data is being released, and also maybe after that you can wait for the market to cool down, like maybe 30 minutes, 1 hour, and then now you start looking for your positions. All right, you start looking for your entries once the market has cooled down from the surprise effect. Okay, so you're gonna be in a point to manage your risk accordingly. Remember, Rome was not built on one day. All right. So also you cannot become rich on one day. So again, it's always good to differentiate your account. Don't let the profits that you have made so far so good to be wiped out by the event of one day, today's NFP. Okay. So the best way that I've always advised you, make sure that you have at least two accounts. If you're a person who is really keen in terms of trading the fundamentals, because trading fundamentals is a high risk. So make sure you have a high risk account, a different account that you can be able to use now in terms of trading fundamentals, so that you don't end up losing all your profits, all right, that maybe probably are made for the week, or maybe the ones that you had made even for the last month, because August again was a good month. This week again, it was a good week. Starting last week, gold has been bullish, all right. I know people have made a lot of money here. So protect what you have. It's good to protect what you have. Okay. So with that, ladies and gentlemen, let's meet in the afternoon at 3 p.m., whereby we'll be talking more about the NFP. So we'll be having NFP session today from 3 p.m. to 4 p.m. So make sure you join. Let's see what the market gives us. Let's digest the data and maybe probably be able to project where the price, what we are expecting, maybe probably next thing for the Fed to do. All right. So with that, thank you so much. Have yourself a wonderful day, even as you brace for the weekend. Take care. Make sure to evaluate your trades, journal them, evaluate your performance, and also analyze the market in terms of what you're anticipating next week. Okay, because whatever is not planned, sometimes higher chances that it's never achieved. So with that, remember to remain disciplined, to remain focused, and to always trade with purpose.